So the market stat report here is for you for the June of 2025, and you can see in this video a few things. One is what's the difference in 12 years that has been in the making for a Toronto real estate environment, basically. And I mean, my life plan at the end, which is a very exciting part, and I'm going to share that with you. So let's start. It is June and the weather is warm and the patios are packed and the housing market, as I said, the interest rates haven't changed. What's going on in the market? Are we actually moving or everyone is on the fences and everyone is waiting for another interest rate cut or there are a few other things. I'm going to cover all of those in this video. Well, that's the different kind of hot market or hot weather that we have. Let me walk you through what's happening this month. Then I'll rewind to, as I told you, 12 years ago, June of 2013, to show you just how wild the shift has been. So what's up in June of 2025? Average home prices is million one, and that is down $40,000 from last month, which is month of May, and nearly flat compared to June of 2024, which is last year. 0.5% lower year over year. By the end of the year, I'm assuming that we are going to get almost the same amount of maybe a price correction, maybe you call it. But number of sales for this month has been close to 6,000 and change, 6,200. Let's be honest about that. Lowest in June month for the past 4 years, and down from 7,000 of last June and 9,000 from June of 2021, which was a hot of the market. So I want you to see the difference between the peak market and what we have right now, which is a low market. Maybe you can get lower than that. New listings, 23,000 and change, closer to 24,000 actual, is the new listing. That's a lot, and that's a big year over year and month over month jump. So homes are sitting longer and buyers are chilling. Quick reality check here for you. So in plain English, prices are holding, sales are slow, and inventory is overflowing. And if you are a buyer with a pre-approved and you can afford, basically, you are in the main character of this market right now. Back onto June of 2013. In real estate time machine, and let's hop in the DeLorean and rewind to June of 2013. Average GTA home prices at that time were $531,000. That's less than half of what is it today. Typical mortgage rate, which is everyone's banking on. Lower mortgage rate is going to increase the flow of buyers into the market. But let's check, let's reality check that with what we have actuals in June of 2013. Mortgage rates were around 5.2%. Households were spending, based on my stats, just doing a simple Google view of what's been on the market at that time, what's been coding, and what's been coding as the average income of families here in GTA. They're about 50% in debt if they're buying a house at that time, with 20% down. And sales at that time, they had the sales of over 8,000 transactions for the month of June of 2013. Way fewer listings, and so buyers were more active. Prices were lower and everybody's borrowing, but the borrowing cost was higher and the mortgage rules had just tightened. Go back in that time and check that. Let's delve into affordability check. You know me, I'm always about sustainability and affordability. Then versus now. In 2013, at 5.1% mortgages, 20% down, a monthly payment on an average house was $2,500, half of the income at that time. in 2025 at $1.1 million average home in GTA at 4.09% mortgage, which we got it just today, same 20% down, monthly payments were over $4,500. And that eats closer to 70 to 75% of income in Toronto. So yes, rates are lower and everybody's quoting that affordability is coming back, but the prices are high, much higher, almost double. And that it now takes almost whole paycheck to buy what's used to be called a starter home. Yeah, average homes in Toronto GTA are starter homes. So what should you actually do? If you're a buyer, be picky. Negotiate harder and look outside core neighborhoods. Don't skip conditions. You don't need to beg anymore. If you're a seller, get real. Overpricing is a ghost town. You need a strategy, not a wish list. And if you're an investor, this is a hold your cash and watch the market, to be quite honest with you. Distressed deals are creeping in and watch the condo inventory closely. I told you several times before, condos are a gem right now if you're an investor and if you're looking to make a good deal. Again, you have to bargain harder. Well, real estate used to be about location, location, and location. But now it is timing. It is math. It is knowing your leverage. 12 years ago, when I started, buying was easier. But now it's more possible than it was a year ago, but definitely harder than it was back then. Follow for updates like this. No graphs, no guesswork. It's an actual bottom of the market news for you. Just the real talk. I'll be here next month. Let's share news on my personal life. Unless we all move to PEI for affordable housing, I'm here